Hello guys, Dmitry Bonner there. I have been investing since 2013, and no matter how experienced am I'm still asking myself the same question every time. Where should I invest to earn and not to lose? And what type of asset is the best way to invest in? As I cannot predict the future, I will do the opposite. I am trying to analyze the past and provide the answer for the most important question: which asset class are worth of your money and attention? So a few weeks ago, I received an email from the Financial Samurai website with an amazing table where the author gathered information about the historical performance of all asset classes from 2011 to 2021. And it's a real treasure. I want to share with you my opinion regarding this great analytics. I made a very deep research and analysis to check all data from this newsletter and to answer one main question: what asset class is the best for me and you guys to invest in a long run? So keep watching. And here is the table where all the statistics regarding all available asset classes and their total returns over the last 10 years. As you can see, Bitcoin is out of competition in this table. While it's not a traditional stock, this cryptocurrency was perhaps the best investment you could have made in recent years. Yes, it's a highly volatile. And Bitcoin has dominated the returns except for only 2 years, 2014 and 2018, when it fell 58% and 73%. Bitcoin didn't go public until 2009, at which point Bitcoins hovered around 5 to 10 cents. 10 years ago, the price was about $1. For $10,000, you would have bought yourself 10,000 Bitcoins. And if you held onto that Bitcoin amount until today and sold all your Bitcoins for yesterday's price of $59,000, then you would have made over $6 billion. But if Bitcoin is too volatile for you, choose other asset class from this table: Nasdaq-100, one of the world's prominent large-cap growth indices. It includes 100 of the largest domestic and international non-financial companies listed on the Nasdaq Stock Market based on the market capitalization. So Nasdaq-100 Index is the home to some of the world's most innovative companies, including Google, Intel, Tesla, and others. And as you can see from the table, Nasdaq-100 has provided the most pleasurable returns over the past 10 years. So for example, if you had invested $10,000 in ETF that tracked the performance of Nasdaq back in 2011, that would be worth more than $54,000 as of April 2nd, 2021. That works out to a return of almost 541%. Nice number, guys, nice numbers. And you know, even if a half of this would have been a great result. But guys, if you invest just 1 second of your time and smash the like button, your $10,000 investment invested in ETF, Bitcoin and other assets will grow even faster. So don't just click the like button. So coming back to the table with the asset classes, exactly half of this profit, 282%, you could have made if you have invested in US large cap class of assets. Companies with a market capitalization value of more than $10 billion. These stocks show as a good performance as Nasdaq 100, even though the numbers are almost twice, 282% of total return of 541%. The most interesting question is which exactly large cap stocks it was better to buy back in 2011. For sure, Amazon, Apple, Alphabet, these stocks would have made you rich as a Warren Buffett. 10 years ago, investment of $10,000 into the stock of nowadays e-commerce leader Amazon would turn into about $200,000 today. So it's about 2,000% of total return. At that moment, Apple stock were trading around $12 per share in 2011, and $10,000 would have gotten you 833 shares of Apple. At these prices, you would have made nearly $100,000 today. That works out to a total return of 1,000%. These gains aren't near the level of Bitcoin, but you know, no publicly traded stock matches Bitcoin's growth over the years. The next high profitable class of assets is US small caps, company with a market capitalization of between $300 million to $2 billion. The cumulative total returns over the last 10 years are almost on the same level with the large caps. It's about 244%. Small caps are more volatile than large ones, but according to the last 2 years statistics, during the pandemic, they showed even better performance than large caps, 20% comparing to 18% in 2018 and 90% to 5% in 2012. One more very interesting class from this table is REITs. As good as REITs, a real estate investment trust is a company that owns, operates, or finances income-generating real estate. So many REITs pull the capital of numerous investors and go to the public market. This makes it possible for individual investors to earn dividends from real estate investments without having to buy, manage, or finance any properties themselves. As you can see from the table, this class of assets generated a steady income stream for investors even in years when most other classes lost in price. Of course, except 2018 when there was a market crash, and 2020 when the pandemic literally closed every single door in the world. And in my opinion, this class of assets has to have a very special place in your portfolio, as it is a steady and highly liquid, unlike physical real estate investment, for example. And in my opinion, REITs are more reliable than any other bonds, and statistics prove my point of view. All types of bonds show almost the same level of annual return, about 5%. And this is not very good news. More than 6% of annual returns shows only a long duration Treasury Bonds. This is a kind of US government bonds that have maturities longer than 10 years. So when you purchase a long-term Treasury bond, you are basically agreeing to loan money to the federal government for an agreed upon period of time until the bond reaches maturity. And one of its biggest advantages of this asset class is that they are debt secured and backed by US federal government, so they are considered to be practically risk-free. Another safe type of bonds investment are grade bonds. They have a little lower level of return, about 5.3%, but these bonds are defined as having a credit rating of BBB or higher, which means they are at very low risk of default. In case you are an extreme person, you may choose risky bonds, I mean high-yield bonds. This type of bonds pay higher interest rate because they have lower credit ratings than investment-grade bonds. By the way, the average annual total return is only 5.2%, so as you can see from the table, more risk doesn't mean more money. Another type of investment in bonds you could have done 10 years ago is an investment in emerging market bonds. These are the debt instruments issued by developing countries which tend to carry higher yields than government or corporate bonds of developed countries. And by the way, it was the only type of bond that had profit in 2015, a bad year for most class of assets. Keep in mind that emerging market bonds were twice more profitable than emerging market stocks, which have only 3% of annual return. The same low level of return also has a US total bond market. But if you don't like bonds, then buy preferred stocks. Preferred stocks are quite attractive as they offer higher fixed income payments than bonds with a lower investment per share. So invest less and get more. But remember that they're a little bit volatile. 4 of 10 years in this table they were unprofitable. An alternative class of assets with the same numbers is EAFE stocks, stock of Europe, Australia and Far East. These regions are the most productive and profitable regions in the world outside the United States and Canada. So if you're thinking of diversifying your portfolio, EAFE stocks is a good choice with the annual return about 6%. What is not good choice is investing in a gold commodities and keeping your money in cash. Why? Because inflation will eat all your profit as it goes higher and higher than the annual return. And in case you want to protect your money from inflation, it's better to invest in a Treasury Inflation Protected Securities, TIPS. And TIPS is a treasury bond that is indexed to inflationary gauge to protect investors from the decline in the purchasing power of their money. So the principal amount is protected since the investor will never receive less than original invested principal. As you can see from the table, the most profitable class of asset is a Bitcoin. And if we are talking about classic asset, then it's a Nasdaq. Large small caps and ERTs also would be a pretty good investment in the long run. What about bonds and other stocks? It's a quite risky and less profitable. And I beg you not to invest in the gold in commodities if you just don't want to lose your money or freeze it for many years. Thank you for watching this video, click the like button, and I hope your investment will be growing with a very high pace.